Hi everybody, Jeremy here. Welcome back to the channel. On today's video, we're going to be talking about some of my favorite ETFs and why I think they're such a great investment. Maybe you've just started your investing journey, or maybe you're looking to diversify your income streams. Well, congratulations, stocks are a great choice. But individual stock picking, particularly as a first-time investor, can be quite confronting. And that's where ETFs are really powerful. After all, the data behind ETF investing couldn't be clearer. If you invested $50 a week from age 18, by the time you were 60 years old, you'd have over $1 million. And that is all with a relatively hands-off, simplistic investing approach that anybody can follow. I think investing in ETFs is not only great for first-time investors, but also for experienced investors that may be looking to diversify their holdings across a wide array for a low cost. And that's where ETFs really come into their own. But with well over 200 ETFs listed on the Australian Stock Exchange, it can be very difficult deciding which ETF is right for you. On today's video, I'm going to cover my 3 favorite ETFs and why I use them as an investment cornerstone of my investing strategy. But as always, I must stress this is not financial advice. Please do your own research or consult with a qualified professional before making any investment decisions. With that aside, everybody, let's get into it. But for those of you who may be not familiar with what an ETF is, I'm going to cover that quickly before getting into why I think they're such a great investment tool. In simple terms, an ETF is a collection of stocks or commodities designed to track an index or give exposure to a particular asset class. Now, an ETF can be set up to track just about anything. And there's ETFs that track things like gold, major indexes such as the S&P 500, the Dow Jones, the ASX 300, and so on. Basically, if you can think of it, there is more than likely an index somewhere that tracks it. For example, one of the largest ETFs in the world is SPY, which tracks the S&P 500 over in America. As you can see, the returns of SPY essentially mirror the returns of the S&P 500. Using the example of SPY, for every share of SPY, you're buying stakes in Apple, Microsoft, Alphabet, which is Google, Facebook, Tesla, some of the largest and most well-known companies in the world. But where ETFs really start to hit a home run is when you compare them to the returns of other actively managed funds. An article by CNBC showed that 85% of actively managed funds failed to outperform the S&P 500 over a 10-year period. Over a 15-year period, 92% of actively managed funds failed to outperform a simple S&P 500 index. And this is why I think ETFs should be praised. They are a simple, low-cost way of providing broad diversification to the market and have a track record that outperforms over 90% of actively managed funds over the long term. Simply, if you're a long-term investor, it is silly for you not to be holding ETFs that track the major economies around the world. For this reason, I use a collection of ETFs as my foundation for my investment strategy. And despite the swings of the market, I invest consistently. Over the long term, the various indexes that I choose to track go up and down. But when you look at them over the long term, they're consistently growing and I'm able to compound my returns and build my wealth. From this foundation, I'm then able to pick individual stocks that I like for various reasons, effectively building my investment house, if you will. However, the ETFs provide the strong underlying foundation that really solidify the position of my portfolio. However, as I said, there's a lot of ETFs out there, so I'm going to cover off the 4 things I think that are important when choosing a quality ETF. The first thing I look for is broad diversification. I want to make sure the ETF I'm a part of has a wide exposure to the market that I'm looking at and it's not particularly concentrated in a particular asset class or market segment. For instance, I don't want to be overexposed in, say, the financial sector or maybe the resources sector if it can be avoided. That way, my portfolio can stay relatively balanced, which means that as the natural cycles of the markets occur, I'm not overexposed. The second thing I look for is cost. Just because you're investing in a quality ETF doesn't mean that you should be paying an exorbitant fee in order to do so. In fact, some of the most successful ETFs and long-standing ETFs have some of the cheapest fees in the world. For that reason, I choose ETFs that have a really low cost. Number 3, I like to choose ETFs that track strong economies or really strong market sectors. As ETFs form a relatively passive part of my investment strategy, they're not focused on things like emerging economies, they're focused on long, stable economies, the likes of the Australian share market, the US stock exchange, and the European markets. Because my ETFs are focused on tracking large, stable economies, it helps remove the volatility that does exist with tracking some of the smaller economies that are more volatile around the world. Number 4, I want an ETF with a proven track record, buy a reputable supply in the market. As I said, there's a lot of different companies that offer ETFs, but there are some that have been doing this for a lot longer and a lot more successful, particularly the likes of the BlackRock offerings and Vanguard, both of which I really, really like, and I think you can't go wrong with either. However, most of my portfolio is centered around Vanguard ETFs. And with that, guys, here are my 3 favorite ETFs presently listed on the Australian Exchange. Number 1, VAS, which is presently offered by Vanguard. Now, this index tracks the ASX 300, which is the top 300 companies in Australia. The fees associated with this ETF are just 0.1%. So if you had $10,000 invested, you'd only be paying $10 a year in fees. And as you can see, VAS top holdings include CSL, CBA, NAB, BHP, so some really big reputable companies. The second ETF that I really, really like is VTS, also offered by Vanguard. Now this ETF tracks the entire US stock market. So for every share you buy in VTS, you're buying a small percentage of every business presently listed on the US stock exchange. And this includes notable companies, Facebook, Google, Amazon, Tesla. They're all in there for every single share. And the best thing about this ETF is the fees at 0.03%, or $3 for every $10,000 that you have invested. That's right, for every $10,000 invested, you're only paying $3 in fees and getting exposure into the world's largest economy and some of the world's most dominant businesses, the likes of Amazon and Google, Facebook, etc. Last, everyone, fund number 3, VEU. And guess what? Also offered by Vanguard. If you haven't worked it out by now, I'm a really big fan of Vanguard's products. This particular fund tracks the world's largest companies, excluding the US. So it provides really strong diversification across the world, across some really well-known businesses, but excluding the US. Again, the fees are really low with this one at 0.08%, or $8 for every $10,000 you have invested. And in terms of my personal investment strategy, these 3 ETFs work really, really well together. As an Australian investor, I have a really heavy focus on Australian shares, but just because I'm an Australian-based investor, I don't want to have all my eggs in the Australian market. I want to make sure I'm diversifying outside into some of the other large economies around the world, and that's where VTS works really, really well, having exposure to the US market, which is the biggest in the world. And just to provide a bit of further diversification, that's where VEU comes in. It just provides that diversification to the rest of the world and the major economies that are around that aren't just the US. By investing in these 3 ETFs, I'm effectively getting exposure to the largest companies over the entire world. And as you can see, the ETFs I mentioned here today tick the boxes I outlined earlier. They're low in fees, they're broadly diversified, they're offered by a reputable provider, and they track really stable, proven economies. But just quickly, if you are interested in investing in the US markets directly, I have a referral code below for Stake. Stake allows you to invest directly into US shares without paying brokerage fees. And if you sign up using my link and deposit on the platform within 24 hours, you'll receive a free stock. And at the moment, those stocks are either a share in GoPro, Nike, or Dropbox, worth anywhere between $8 and $140. Full disclosure, guys, if you use that link, I also get a free stock. But if you're an investor like me, there's nothing better than free money, and that's what this is. So help me help you get some free stocks. Well, that's it for today, guys. I really hope you enjoyed the video. If you haven't already, please like the video. It really helps me out, so I really appreciate that. Please comment down below about what you think about these ETFs. Maybe you're already invested in them, or maybe you've got some other ETFs you'd like to share. Please put them below. I'd love to hear your thoughts. Well, that's it, guys. Take care, and I'll see you in the next video.